Hey everyone, hopefully you're having a good day. My name's Andy, my channel is Finding Value. Today we're going to go over technical analysis of the diversified mining companies. I call them miners. We've got some copper companies in here as well. In the beginning, we'll do the DOW Gold Ratio and the CRB Index to S&P 500 because those are what are pertinent to a diversified mining companies because they gives you a big picture view of what's outperforming what. And the Dow is still hanging in there. It has not broken to the downside, and I'll show you that. And some of these mining companies, the big diversified miners, are paying huge dividends, but they're still pulling back. And I'm waiting for them to basically stop pulling back before adding or allocating any money into them. So I'll show you what that looks like in the charts. And again, this is just my financial opinion. Please don't use it as advice or anything like that. It's got to fit within your own investing strategy. So let's dive in, show you what we've got. This is the CRB to S&P 500. It's on a weekly candlestick basis. We were coming in this downtrend line. We broke the downtrend line on the big downtrend. Looking at the short term, we broke this downtrend line, this pattern here, to the upside, and usually it breaks, and then it may do like a little bit of a retest. We may come back a little bit. We may even do a full retest before moving on up. So that's what we've got for the CRB to S&P 500, and what this is signaling is that we are putting in a bottom and starting a new uptrend for the CRB index to outperform stocks. That's what this ratio is telling us. Now, looking at the Dow to Gold ratio, we were coming on up in the 2010s. All of 2010s was stocks outperformed. And at 2018, it broke to the downside. We went all the way down to 2020. It's coming back up, which means the Dow is outperforming gold at the moment. And I think what we need to watch here is if you're a commodity investor, and it won't matter that much, but it will be a huge rotation of money if this is true, though. We have a high here in the ratio of 22. I'm hoping that this tops out somewhere in this range so we get a double top, and then we start to head lower. The reason I think we're going to head lower is interest rates. Interest rates and inflation, those two things. But at the moment, the Dow to Gold ratio is still slowly moving up, very, very slowly. It's been moving up slowly since first quarter of 2021. So I'm looking for a break to the downside where gold is going to outperform the Dow. Now, looking at some of these diversified mining companies, this is VALE. I'm going to do a kind of a zoomed in picture and then a picture that is zoomed out. We came in here and we created this pattern here. We're kind of broke. We came in here, we broke to the downside, and we've been moving lower. We have a bullish engulfing here, which usually that could be an indication of a reversal pattern, but it did not reverse. It's continuing to go down. So I wouldn't be doing anything. I haven't seen the turn yet. I haven't seen the turn where we've broken the downtrend yet. So I'd be holding on. Now, looking at it from a big picture view, we broke out of this big, huge pattern here. It's a massive one, and it's pulling back to do a retest potentially. We've got a 21.22% dividend yield, and that may go down a little bit depending on their revenue, but it's going to be a very large dividend. I would be looking to see if this thing reaches all the way back down to this breakout line. Because if it comes back down here, that's where I would look for a turn. I would be looking for a turn right now anyway. But we got to turn before I would say it's good to go, because you might be able to get another $5 off the, well, maybe not that much. Maybe a couple dollars off the price, maybe. So I would just be holding on and looking for the turn. Rio is doing the same thing. We have downward pressure right now. It has not found its footing, and I wouldn't be diving in it yet. And looking at it from a long-term perspective, it should be firming up here. It should be firming up at any point. So look for a turn. Buy into strength. Don't buy into weakness. Here is my opinion. I would be waiting for a turn so it could come on up and bounce off of this support line. That's what I'm looking for. It's paying almost an 11% dividend. So this is a good price down here. There's good value. We have the CRB Index outperforming stocks. If some of these, if iron ore turns around and some of these other metals, that's what I would be looking at. But it's paying a good dividend. BHP Group, it's kind of floundering around as well. We've pulled on down a little bit. This is a bullish engulfing. Sometimes they pull up and they pull back again. Again, well, we have broken this steep downtrend, and steep downtrend lines aren't as reliable as some of the flatter ones, but we're still coming around here. There's a good value down here. Looking at the big picture view, we're right at support. Look for a bounce somewhere in this range here. If we come back down and we start seeing like a bullish engulfing or something like that, then I would probably sprinkle some in, be a sprinkle master. It's paying a 13% dividend yield. This guy has a lot of copper. It's got some nickel projects. It's got a lot of good stuff going on for it. And we are at a support line, a big long-term support line. So this would be one I would be looking at to turn. And when it turns, I'd become a little bit of a sprinkle master. Sprinkle some money in is what I would do. Now, South 32, they've got some coal in their mix, some silver. They got a lot of good stuff. It broke out of this pattern here, broke to the upside. It's pulling back. Big up days, small down days coming through. It looks pretty good. Let's look at the long-term perspective here. This thing looks really good. We've got a long-term trend line that we broke to the upside, and it's pulling back to do a retest. So it's probably going to come back in this area here for a retest in the $13 range or something like that. So this one looks good to do a nice, good launch off of this support line. That one looks really good. Here's Norilsk Nickel. This is a big diversified mining company. They've got a lot of nickel production and platinum group metals. It's been moving sideways. It's still in this channel. It has not broken out of the channel yet. Looking at it from a big longer term perspective, we have this pattern here that it broke to the downside, and we could go and pull back here for a little while. We could meander lower from this pattern here, and the projected move is the size of this guy here, so we could come down a little bit. And you could get a very good buying opportunity. It pays a 7.24% dividend. It just hasn't moved up yet. We could see further pressure to the downside. Here's Glencore. Now Glencore here looks, it's painting a little bit different picture. It looks a lot stronger here. We broke this pattern there, this pattern coming up, and it looks very good to continue higher. So Glencore looks good on the short term, looks fantastic on the long term. This would be one I would be looking to purchase at the moment now. So this one looks absolutely fantastic. Anglo American Platinum, another diversified mining company, it still is in a downtrend, and I'd be waiting for this downtrend line to break. On the big long term, we do have support underneath it. So look for support down in this range again if it were to come back down in this area. If it finds support again, maybe we turn to the upside, maybe sprinkle a little bit in around the $14-something range. That's where the support is on the long term. Here's FreeportMcmoran. Again, we got the downtrend line break. This thing looks good on the short-term basis. A lot of these copper companies look really good. On the long term, it's still trying to break its long-term downtrend line. We've got basically a cup and a handle pattern that's developing here, and then we'll have to break. This is a big long-term pattern. We could see a big move after this break if it were to occur. Looking at Tech Resources, downtrend line broke on the short term. Looks like it's going pretty good. So short term, I would say looks pretty good. Long term also looks pretty good. We broke this downtrend line. This would have been a good time to be buying when we break the downtrend. They usually pull up and then they come back a little bit. Sometimes they come back and do a full retest. Sometimes they only come back a little bit if it's a very strong sector. We're moving back on up. It looks like we broke this guy here. I would claim that this is in a new uptrend for Tech Resources on a big long-term perspective. So Tech Resources looks really good as well from both a short-term and long-term perspective. So in these sectors, what I would be looking at are the copper companies, because that's what has broken to the upside on some of these. Glencore is probably the best of the group. That would be the one that I would add into. Some of these other ones, they're trying to do like a double bottom off their support line, like a BHP, something like that. I might be looking at that here in the near term. These are the bigger dividend, more diversified companies. You're not going to get the leverage like some of the smaller ones, but they offer a little bit more stability, and they're going to pay you a bunch of dividends to sit in it. And if you're getting a 20% dividend or 10 to 20% dividend, I don't know of other companies that pay this high of a dividend anywhere in the market. And if we are entering a commodity bull market and you buy at these prices down here, those dividends will increase throughout the commodity bull market. So if you were to take the dividend at the price that you're purchasing today, you're going to get larger and larger dividends. They could be 20, 30, 40% dividends at the end of the bull market based off the price you buy today. Just to let you know, I mean, that could be massive dividends coming your way. So that's what the diversified mining sector looks like, kind of to sum it up. I would be looking at the copper companies just based off the technicals. If you guys are looking for dividends, then I would be waiting a little bit for a little bit better purchasing price to see if it pulls all the way back for like a BHP, VALE, Rio. Some of them have not found their bottom yet. I buy into strength. I don't buy into that weakness. Let the weakness run itself out. Let the sellers tire themselves out. Wait for the a basing pattern or a pattern that looks like it's bottoming. And then I cost average in. Again, I go slow. I'm not fast into some of these companies. You buy a little bit, make sure it's coming in, and then buy more into strength. If you guys like this analysis, give me a thumbs up. Subscribe to the channel if you haven't already. And thank you for listening. This is Finding Value.